Okay, happy Friday. Evan here, Stock Market Weekly. I am recording this a couple of hours before the market close. So earlier than scheduled, we got some friends in town. Evan can't work late, and so we're getting this done early. And who wants to look at markets? Because Warsh came in on Friday and just totally ruined everything. We're selling off across the board. It's just the dollar that is basically working here on Friday. And recently, this week, nothing is working anymore. As a trader, it is a very frustrating market because momentum is not existing anymore. Breakouts aren't working. The old leaders are not leading. So we're going to talk about that. We're going to talk about some of the frustration out there and some of the small pockets of hope for this market. So hope you're doing well. Let's get into it here and take a look at what we got. So front and center, I think we got to talk about NVIDIA. So this was NVIDIA week, all praise Jensen, and he did not disappoint. The company is really just setting records for all of history, I think, to look back on. Outstanding numbers, growth is good. Yes, we can nitpick margins, but generally speaking, this was fantastic across, and there are no reasonable signs of slowness here that are on the horizon. I'll leave it at that. There are a million podcasts in your favorite LLM that can dissect this report a million ways before the weekend is over, but we saw an immediate pop on the stock, and then we saw a little bit of drift down here on Friday. We'll look at the action in just a little bit. Unfortunately, it looks like Fed Warsh here has taken over the market news with more hawkish comments, rate hikes that he is signaling on. And I think the most important is what the market is expecting for September, which is now a rate hike. And we've seen this before. Markets, we love to jigsaw, and to some extent, this is partly probably their job. They're gauging market reactions. It's always a seesaw. We swing on a pendulum, and right now the pendulum is swinging back to a potential rate hike for next month. We're seeing it spill off through risk assets here on Friday. Everything is selling off. It's just the dollar, which is catching a bounce. Last week, we talked about how the dollar was so oversold, it was just one way down. So part of this is just makes sense. The dollar was down sharply. Now it's bouncing, gold selling off, Bitcoin selling off, denominated assets, yields going up. All of this sort of makes sense. I think obviously the rubber that meets the road will be next month on the Fed expectations. Here's some glimmer of hope. Bitcoin, actually meant to show this slide first, so we'll look at this slide first. This is software, IGV. I posted this on social. This is IGV divided by SMH, 2-year chart. So we're going way back. Take a look at this. Steady downtrend, and whoop, we're moving up. This is not new. We've been talking about software. I've been kind of saying it relentlessly that software is a better place to be than hardware. Continues to see itself play out, especially this week. And so we can look at some more examples of that. And so far, so good. Also Bitcoin, though, and you can see how these two charts are very correlated. Bitcoin and software, both kind of topped around the same time, both the same, kind of magnitude decline down, and they're both trying to stick a landing, turn the corner up. So Bitcoin, again, selling off on Friday a little bit here, but still heading in the right direction, I think, overall. Now, numbers, I won't spend too much time because I'm recording this a couple hours before the close. So these weekly numbers are not going to line up exact. I think your big takeaways here, gold and oil down sharply. SPY coming back down here on Friday. VIX stuck in the mud. I think also what makes this so uniquely frustrating is that, let's say you nailed it and you said, you know what? I think the market's due for some kind of sell-off here. We're going to see some volatility, or we're going to see some crankiness. The VIX is lower this week. It's not higher. It's down. So we're getting this stagnating where VIX isn't hedging. You're getting a ton of movement underneath the hood. And you're getting this rotation, this chop, this game of musical chairs that is playing. Dollar index up sharply here on Friday. And again, this is what we talked about, right? Like straight down sharply for a couple of weeks. And now we're getting just a big, fierce kind of retracement working off oversold conditions. As a technician, you could look at this and say, you know what, we're still in a short-term downtrend. We're fine. Obviously, if you're more macro side, you're looking at what the Fed just said and you're saying, there it is. Like there's the narrative kind of fitting. 10-year treasury yield, this is still a little bit of a problem here because it's sticky and it's climbing back to the top end of this range. 4.75, that's kind of where we've been stalling out. If we start breaking through there, then the big round 5% for the 10-year treasury yield starts to fit a lot of narrative and doomsday scenarios. This is the sector performance this week. I'll leave it to you to look at that. Underneath the hood, 52-week highs and lows. There's really not much to say. The highs have been drying up. The lows are kind of drying up / going sideways. There's just not too much of an interesting narrative there. Percentage of stocks above a 20 SMA, we're washing out. So you can see we're down around the 40 percentile. So we're in this kind of oversold area where we tend to see bottoms get put in. Put to call ratio. I have to look at this data because I just don't know if that's because I'm recording this early. That might be a snafu on the data at the end. All right, so let's jump into some charts here. This is Bitcoin and this is the spot, but we'll look at some other charts here in just a second. Before we jump into those charts, IBD, our sponsor of this show and this series. Thank you, IBD. Get yourself some discounts. Market Surge, IBD Digital. Got links in the description of this episode. Once you get done watching, claim those discounts. Tell them Traderist sent you. Thanks for sponsoring the show, IBD. Now, let's get into some charts. All right, we got some charts in front of us. We're going to start with the S&P 500. Let's pull those charts back up. There it is. All right, so again, we're a couple hours before the market closed. Take a look at the turnaround session here on Friday. We had this brief attempt where the market was like, oh, maybe I'll come back up and retest these highs. Rejected, failed, reversed, and now we're probing at these lows. Here's the thing, S&P 500, when you look at it from an index perspective, or especially if you're an investor, you're totally shrugging off this environment. There's nothing happening. It's quiet, status quo. We're just off of all-time highs. What is wrong, right? Like, what is wrong? If you're a trader and you're going through these individual stocks, it's like whack-a-mole and you keep getting hit on the head because momentum keeps showing you signs over here and then it kind of breaks out and it rejects and then you go chase this thing. And it's a difficult time for the traders. It is status quo for anyone that's longer term zoomed out and just ETF sort of holding the market. Now, S&P in the short term, look, feels like just more chop. 7,600, we held it last week. Do we have to go back down there again? I wouldn't love it, but if we can stay above 7,600, then we can essentially chalk all of this up to noise and the market's still in a pretty healthy position. If we look at the QQQ, again, you can see the pattern is a little bit different here, but the outlook is kind of the same. It's chopping sideways. S&P 500 has already broken out. Q's never got their breakout. They're still moving sideways. Again, it just seems like it's setting up for more frustration, rotation, and time. Market needing more time. If we start losing 690 or so, I get concerned. I get more excited about the upside potential and continuation in this market above, call it 745 to new highs. Pretty simple. Russell 2000, again, in pullback mode here as well. Like we talked about at the top of the show, the VIX is not doing anything for us. In fact, if we look at where the VIX attempted to go in the morning, we briefly made new lows on this cycle for the VIX at 14.14. We did bounce off of it a little bit, but in terms of kind of the sell-off we're seeing and how individual stocks are reacting, you're just not getting it here on the VIX. I think you're going to have to wait until either OPEX gets closer or certainly until Labor Day comes back and some more volume comes out. It's still a game of dispersion. Index seems pretty cool, calm, and collected here. We did talk about the dollar that caught a big bid here on Friday. Again, is it going to change the trajectory that we are in right now? So we kind of have this going on here. If we start ripping through these August early highs here, and we start invalidating this kind of series of lower lows, lower highs that just started, then we're going to have some issues. I mean, you could technically set a lower high in here too. So for now, dollar's in bounce mode. Let's pay attention to it, but it's acting as a wrecking ball for risk assets going into the weekend as everybody's nervous now about these rate hikes that are coming. Momentum. I want to talk about momentum. It's something we do here very well now with quant rockets, and we're developing it each and every day. MTUM. So this is kind of the classic flagship momentum factor ETF that almost everyone looks at. And so again, when we look here at what momentum is doing, MTUM ETF, you can see that it's chopping, pulling back, and in no man's land here, right? We are in kind of selling off and rolling over again. We haven't done anything exciting for momentum since June. That is when all of the fun and excitement and the mania sort of peaked in this market. That was June. And so when you look at this ETF and you see it just kind of slowly grinding lower, what that tells you as a trader is that the things that have been working, right, the leaders of this market, where, you know, however we got to where we are right now, those leaders are no longer leading. There's no longer energy behind them. It's rotation, it's bleed, it's sideways. There's new leaders. There's, you know, things that we're kind of waiting on here. And that's when your breakouts are going to be difficult. And that's when momentum is obviously difficult. So we're still waiting effectively for the next wave bid cycle excitement to kind of come back in and catalyze us with the AI trade. Let's just broadly call it that. Or we need more convincing leaders. We need we need a rotation to happen. Software, Bitcoin, right? Biotech. Are those the three things that get very specific now, up the stack a little bit in the AI trade as the next leg for this bull market? That's the high level $1 million question. There's a million people that'll pontificate about very creative stories and tell you, you know, XYZ on why it has to be this next segment or stock. The point is, until we start to see it show up in price, which is how we prefer to do things here, you can look at MTUM, you can look at some of the momentum stuff that we're doing and delivering, and there's more updates to come on that front. I think that's really where the rubber is going to meet the road. So for now, the things that have been working, they're not working. They're still not working. Let's look at things like, again, the Neoclouds. I always go to iron first and kind of pick on it. I mean, it's rolling back over. It's in a multi-month, multi-year sideways range. And it's now in, again, I'm sorry, I think I messed up, 50% correction. All right. So again, heaviness. Look at Cypher in a 50% correction. These are all the Neocloud kind of plays. Applied Digital, 50% down. Go to Nebius, go to CoreWeave, go to even BE starting to struggle again. All of these names, again, think about situational awareness, this whole AI CapEx, you know, beneficiaries, they're all still struggling. And I think that's what the market is really effectively just waiting on right now. It's churning through traders. It's churning through or burning through theta for any of the call buyers in all of these stocks. Let's talk about quickly what is working. It's Microsoft. Good old Microsoft. Really, when you look at IGV, I mean, you look at Microsoft, you look at Palantir, which is still doing work higher. Oracle, it's not bad, but it's not exactly springing entirely back to life. Look at Salesforce this week, which got some nice new fresh momentum. Look at ServiceNow. This is rotation. Like, this is still now where the hot money's kind of moving towards, and it is working. Meanwhile, SMH, again, looks like it's kind of sinking, stuck in the mud, stagnating. So that's just the lay of the land right now for hot stocks. So IGV is above its June highs. Look at semiconductors. Here's the June highs up here. So we are 21% below them, right? Like, that's the difference in the short-term kind of relative strength, rotation, trade, and chart that we looked at earlier. Bitcoin, we talked about that. This is selling off here on Friday a bit, but look, I mean, it went vertical. Look at the volume that came in here. We're back to this kind of pivot zone highs from April, May timeframe, right around 82,000. It still feels like this can squeeze some more before a good reset. I wouldn't be surprised to see spot Bitcoin price go up into the mid 90s, maybe even get everyone super excited at 100K test and then, you know, reset or pause or take a longer breather from that point. Again, this is something we'll keep our eye on. Our trading systems are back long it, so there's momentum here. There's some momentum in these stocks, and that's where some of the good stuff is kind of coming from right now. I would say the past leaderships is still kind of struggling or stagnating. Micron, I'll give it some flowers here because it is holding up pretty well, better than I thought it would, but it's still kind of just flatlining. Certainly feels like a move is setting up though. So I would pay attention to this for all you Micron bulls or bears, because there's some compression that's happening here on a volatility basis, and we know that vol compression leads to vol expansion. So all in all, you know, index investors I think are basically just yawning right now because there's not a whole lot going on. But I think for traders, there's a lot, right? Like there's still a lot going on. Let me pull up really quick our market navigator, because I do think this is interesting as well. So despite, again, the pain perhaps that traders are feeling, our market navigator is still printing green, bullish kind of runway here. So again, it speaks to perhaps the broad market risk appetite is still healthy, even though we are still figuring out from the stock basis who can convincingly lead us here. This data is of yesterday. I don't know if today's sell-off is going to start to impact this. If there's going to be a downgrade, I don't suspect there will be, but there is obviously a chance. And if we look at some of the industries that are working right now, metals and mining, software, healthcare, right? Really, like those top three, I think, are the big three things we can look at. And we've been talking about them as themes. Again, some of the metals and miners are getting hit here on Friday with this move in the dollar. So GDX and all these miners are now in sell-off mode, but I would watch them. Like I would watch them. Freeport McMoran, I posted this chart on social here. This just recently had a breakout. It's pulling back now. These are stocks that I think are in that pullback re-entry mode that could get interesting, as just a small example. So I think that's everything. That's all I have for this week. It's, you know, sort of frustrating out there. It's summertime trading. There's chop, there's a rotation, there's, you know, whack-a-mole with interest rates again now with Warsh. But let's see if we can continue to follow a process here. Our Galahad trading system's coming back to life. Again, that's because it's all ETFs. And so it's just kind of hanging out fine and doing its thing. Whereas our momentum portfolio is still taking losses, stops, exits, either small losses. In the case for Credo, which I was beating the drum on for a while, I use it as a lot of illustrative example processy videos. We took the exit in it, which I believe was on this day we exited. We bought it here. So it was like a 2% gain, but we're out. And, you know, we were up 15% or whatever this was at one point. We didn't catch any of it. Unfortunately, we're out. We'll see if we, you know, revisit this. Sure, we will at some point if this can get its act together. Maybe it chops for another few weeks, starts to make a move up. We get back in, and that's the life of the trader, right? You live to fight another day. You have your risk management rules, and we certainly do here. So that is everything. Hopefully you had a good week out there. Thanks as always for tuning in. Every Friday we are broadcasting and trying to do some more intra week, which hopefully once summer's over, I'll get back on or start a fresh schedule for that. We've got links to our trading systems and our sponsor IBD. Have a great weekend. We'll see you back here next Friday. Take care.